And at the time, kind of the rate of growth I've got right here, it was increasing at a rate of about 8x, the number of flops required for training new models, you'd say. 8x every 2 years. Here's the number. The rate had moved up to 275x every 2 years. And you've got 8x every 2 years, and now you're making a step change. This is the bear case, right? Like if you think AI is a bubble, you either think two things. Progress is going to slow down this.
All right, folks, welcome to Investing for Beginners podcast. Today, we have a special guest. Today, we're going to have a lot of fun. We're going to talk about AI. We have Eric Bleecker here from 24/7 Wall Street and the AI podcast. And we're going to talk about all kinds of great stuff related to AI and maybe some other fun things. So, Eric, thank you very much for joining the show today. I'm looking forward to this convo.
Yeah, thanks, Dave. I think it'll be a blast.
Yeah, for sure. All right. So you mentioned off air that you kind of have a fun kind of personal story about AI. Maybe you could share that and we could kind of go from there.
Well, as ways of my background, I had graduated in 2007, right when the job market was teetering.
Oh, that was good timing on your part.
Great. You see all the studies of how your future's determined when you graduate. I was about the worst.
Oh boy.
So I was from Seattle, and luckily Microsoft had a lot of temporary jobs you could work at for a year or so. I took one of those. I did the first couple levels of the CFA exam to kind of build out my resume. And then I was going to go into the financial world full force. So I got a job that would have put me into a very conventional equity research role, but they had intimidated me so much about you need to do West Coast hours. So they were saying during earnings season, we want you in at 4 a.m. You'll work until 7 p.m. And I was planning for 3 hours of study for my exams. I joke you not, Dave. I was going to rent a 100-year-old woman's basement. That was just a hot plate and a bed. I think it was $300 a month in Portland, which is a staggeringly cheap rate. But the day before I was supposed to start, I got an offer from another company across the country, which was the Motley Fool. And you couldn't just be any different in terms of one's a very conventional route. One is a very unknown route, but something fun and entrepreneurial. And I like the Motley Fool's website. So I said, I'm going to choose door B. I'm going to move across the country on a whim. We're going to start this journey. And honestly, that was kind of the best decision I ever made, because I got to the Motley Fool and it was a company that gave incredible amounts of autonomy. I was appearing on CNBC within a year of joining there. They probably should have, that probably was a good idea, but you figure out your way quickly. And they, like I said, they gave me just an incredible amount of latitude. Within months of getting hired, I was hosting NVIDIA in the office and other companies. And, one thing that did was it gave me the Motley Fool's investing style is so trend focused. And you have investors there that are a little bit more conventional, like what I would have been doing if I had taken the other job in equity research, where I was updating discount cash flows and had spreadsheets. And then you have investors who have strategies that are a little bit more finger to the wind, and they're trying to identify the right trends and getting the stocks underneath. And you have someone who is a very iconic investor there in David Gardner with a specific strategy around what he calls the signs of a rule breaker. And looking for things at the time, I was so uncomfortable starting out that you wanted stocks that the media said were overvalued, and you wanted high price appreciation. That was, frankly, coming from mostly academic settings. It took me a while to buy into it. And eventually I did become mostly that style of investor. But, so it set me on that role. And I'll pause here, but one thing that it really did too was it got me on a journey where I've been able to interact with AI since its most humble beginnings as well.
That's awesome. So everybody kind of thinks about AI as like this overnight success because a couple years ago it came out and it kind of set the world on its head. But as you and I both know, this has been a long time in the making. It's far from an overnight success.
Yeah. And so the first stock I ever bought was NVIDIA, which is a good one. I'll explain why I didn't hold it. I sold it at a time and then I rebought it, but it really got me fascinated with the company at an early time. And it was because they had announced something called CUDA, which is kind of their I guess you'd call it their framework for being able to take what they make, which is something called GPUs, which instead of a limited number of cores like an Intel processor would have a lot, and make them more general than previously. They were essentially only applicable to video games. So the company and their founder, Jensen Huang, had a vision here, and I really bought into it. So as I'd mentioned, we had NVIDIA into the office. You could still Google Eric Bleecker, best tech stock of 2009, and it's me with an article saying, I think you should buy NVIDIA because there's this embedded call option in high performance computing, which back then it was just supercomputers and a whole lot of nothing. But as you mentioned, every single one of these companies that you hear, they went on this historic run. It was always so much more painful going through that process. And there's long ebbs and flows where it seemed like these weren't revolutionary companies. And for NVIDIA, that was definitely the case in a 2011 through kind of 2014 period. They were trying to get into making mobile chips, and with very limited success at the time. And most people gave up them. I sold that initial position to buy our first house at the time. So that's where I sold it. I buy it again later. But around 2015, we were taking a research trip to Silicon Valley, and I was planning it for many of different analysts that were coming with us at the Motley Fool. And I put on the itinerary NVIDIA. And people, you're not going to believe this because NVIDIA sells out arenas today. People were mad at me
for wanting to go see them.
Yeah, they were like, what are we doing with this boring company? Like, I don't want to talk with them. They make software for video games. They've been static for years. They don't really have any growth. And I was like, you guys there's some new stuff happening, and we should really go talk with them. So we got into a conference room. NVIDIA is famous for having whiteboards all over their conference rooms. And we get in with most of the executive team, and they just put on the board deep learning. And they proceed to just do a tour de force of why this is suddenly going to be at a major inflection point. Now, for anyone, number one, I'll always say the worst thing you want is me trying to describe deeply technical things. Like there's great YouTube videos, channels like I believe it's 3 brown, 1 blue, or maybe I'm reversing that.
Yep.
But they have series on how these things work. But what deep learning does is it just, every iteration of AI is almost a form of better pattern recognition, and they deep learn, figure out how to build neural nets with different layers and how to build different weights. But what neural nets unlocked very quickly was for specific applications. They went from hitting a wall for sometimes 15 years, a decade, to all of a sudden incredible rates of progress in a short amount of time. And that was applications like Siri on an iPhone. Well, Siri didn't do as good. Other voice apps did much better, but things like image recognition. And with this NVIDIA, I looked it up. From the date that we visited there, if you went over the next 3 years, it went up 12-fold.
Wow.
But what often happens, and we alluded to this earlier, any great stock that's a generational stock, it's going to have its troughs. In Amazon, it's had drawdowns of 90% or more. Netflix, hey, we all remember Quickster.
Oh, yes.
Who held Netflix through Quickster? And even Meta in 2022 went through these similar moments. And at that time, NVIDIA, a lot of the media narrative was around the crash in cryptocurrencies, which was a big part. But the other part of this was deep learning was kind of just hitting a wall. And it had solved some problems, but wasn't able to move on to bigger problems. And at the time, kind of the rate of growth I've got right here, it was increasing at a rate of about 8x, the number of flops required for training new models, you'd say, 8x every 2 years. So just keep that one in mind. So as example of what changes in the years after what we're going to take on from here, Meta, they made a very big investment in personalization in 2019 through 2021. That was all CPU centric. We flash forward to today, they're not really spending any money on CPU centric servers, and they're going to spend 60 to 65 billion in GPUs. So what happened in this period that, as you mentioned, kind of leads to the current era with NVIDIA? Well, there was a specific breakthrough called transformers.
Mhm.
And once again, you'd be much better served going to an actual LLM than me to get description. But the key idea with transformers is they use a mechanism called attention, where basically these LLMs, they're able to, instead of looking at words in a serial order, they're able to understand context across an entire sentence or paragraph or what have you. And what this has caused is a series of rapid breakthroughs in brand new domains. So self-driving cars. I visited Waymo a lot in 2015, 2016, that era. I visited Baidu. There's so much, they would reach all these edge cases where they would have to go and build a test track out in the desert and try and get all these, and it just wasn't scaling to what's needed. Now that companies like Tesla have gone end-to-end neural nets, it's solving this extremely rapidly. It solved understanding language, which has unlocked so much extremely rapidly. And here's the number I said, keep in mind, deep learning, which was that first NVIDIA era, it was seeing a growth of about 8x in the flop scene for training every 2 years. What NVIDIA found at the beginning of 2022 was the rate post-transformers, which really were catching on 2019, 2020, the rate had moved up to 275x.
Wow.
Every 2 years. So, we've got Moore's law. Some people do different amounts, but let's say it's 2x every 18 months.
Mm-hmm.
Then you've got 8x every 2 years. And now you're making a step change, 275x every 2 years. So at this point, I was seeing this and knowing it's pretty inevitable. We're about to see it start getting weird, right? We're about to start getting weird. And when the weirdness really came out to kind of the world as a whole was late 2022 with the release of ChatGPT. And most people would call that the iPhone moment for the generation. If you want to go back and look at returns of most major AI stocks, you go back to generally the beginning of 2023 after the release of ChatGPT, because that's when it became blindingly obvious that something had shifted. And that's when all the biggest companies in the world started adjusting their spending. So, I think it's a good place to pause here. But what I will say is one of the interesting things is there's something in the background called scaling laws. And it's a question of how long this progress can keep up before technique essentially starts seeing what you call uneconomical returns. You can keep making things better, but it's the amount that's getting better isn't worth how much you're having to throw at computing. It really looked like we were hitting this in the end of 2024. But there's been a new paradigm that's been created, and it's called reasoning. And if you're wondering why Sam Altman's talking about a $500 billion data center in Texas, and it just broke across the news, we'll see if it happens, but we're talking about $200 billion from Meta potentially in a major campus. The reason behind that is we've shown how there's these breakthroughs across AI. It's a breakthrough and then an S curve that flans off, a breakthrough and an S curve that flans off. We may be at the beginning of an S curve that is creating, if you think it's been crazy in the past, it could be igniting the craziest arms race ever. So I know that's a little bit of a tease, but that is what makes this so exciting and why this moment, if you look back in a few years, it'll either be the beginning of something great or something so fabulously wrong. You'll laugh at me saying this, but that is the moment we are sitting at right now.
Right. Yeah. And that leads me to a whole bunch of questions. So
sure. Yeah.
Bear with me. So the idea of the scaling law, can we double click on that for a minute?
Yeah.
And maybe talk about how does that relate to maybe Moore's law? And then how does that relate to, is that more on, this may be a dumb question, is it more on the edge of where we're going? Or is this more, okay, you're going to start to see a company like, I don't know, AT&T or Verizon embracing this? Or is this something that these things are happening on the edge and at some point it'll become more mainstream?
Yeah, the scaling laws, they're mostly from the companies building what you'd call these frontier models.
Okay.
And essentially what scaling laws are, it's not some law of the universe, right? It can be broken, but it was an observation with post transformers with these LLMs, things like GPT, things like Grok, things like DeepSeek, that there is a log scale relationship that if you are able to provide more data and more compute, that you're going to get better results. And how this works is essentially, as I know, it's a log scale relationship. So if you start with a $10 million training run, then the next generation at 100 million, you're going to continue seeing. So that's why partially, if you go back to like a 2024 period, a lot of the projections were for this. Well, we'll do 100 million, then we'll do a billion, then we'll do 10 billion. Now, as I noted earlier, one of the problems with this is that it was becoming uneconomical. And a big reason for that is, frankly, we're running out of data. Like there's just not enough data to keep pushing through more high quality data to get high quality outputs. And they tried filling this in by using synthetic data or kind of fake data. But when you're using synthetic data, that's often created by the LLMs themselves. You start creating a secondary effect of the biases that already exist in other problems. So they were hitting this wall. And now what's happened is these brand new reasoning models, this kind of new scaling paradigm, they actually have new ways of creating new data that at the current time, we are so early on, as I've noted, this S curve, it is very unclear where this ends. And it creates actually new paradigms for needing even more compute in different areas. So, it looked last year like there might be, this is the bear case, right? Like if you think AI is a bubble, you either think two things. Progress is going to slow down, all this capital expenditure is going to be mostly wasted, or you believe that we continue seeing this kind of exponential progress and none of the companies investing in it lets up. It becomes something that becomes utilized by companies using massive amounts of inference, and there's going to be some air pockets along the way, but we get there without a big crash. The case for the bad side looked a little bit more realistic mid next year. Right now, there's a pathway that we see no end in sight once again. So I hope that kind of explains scaling laws better.
Oh yeah, for sure it does. And maybe to talk a little bit about the returns that companies could get. There's been a couple things that have kind of rocked the investing world, if you will, about AI. One is, of course, the DeepSeek revelation from China, and the fact that they were creating these great outputs without having to spend the same amount of money. There's a lot of dubiousness, skepticism about how legit that is. And then Microsoft announced that they may be cutting back on CapEx spending. I can't verify that. I've just seen a few tweets. So I guess, how does that kind of play into what you're talking about too?
You are setting me up to go on a mini rant here.
That's
it's
my
a
job
bull.
here. I'm Magic Johnson and you're James Worthy. I'm just feeding you, let you do your thing, baby.
It is a bull market right now in hyperbolic takes on Twitter. I've never seen anything like DeepSeek. On my podcast in early January, I did a preview where I said, well, what are the greatest risks that I see for the market this year? And I specifically went through DeepSeek. No, the crash for DeepSeek didn't happen until later in the month. So how's that possible? Well, all the innovations from DeepSeek, including the total training cost of 5 point whatever million that was frequently cited, that was all available in December. What they did was they released their reasoning model, R1. I believe it was on Inauguration Day. You can decide how coincidental that is. And across the week, this just spun up as a Twitter narrative. Now, so DeepSeek, it definitely introduces a lot of innovations, but I've spent a good amount of time working in financial marketing and understanding what attracts customers to ideas and paid products. And one of the most powerful ideas in financial market is to use an out of context large number. You could say, right now we're starting with $1 billion into self-driving, and within 10 years, we expect to be at $1 trillion, and that's 1,000x. And that brings to people, it's such a large number, and there's nuances to that, right? But it gets people excited. So DeepSeek had a lot of out of context large numbers associated with efficiency. One of the difficulties is the rate of progress in efficiency in AI is astronomical right now. Between I think it was mid 2023 and late 2024, the cost of inferencing per compute on OpenAI decreased something like 150-fold. So you're constantly seeing massive breakthroughs, both on a hardware side from companies like NVIDIA and an algorithmic side from the large language model providers. So if you say something like DeepSeek caused a 10x reduction from some of their innovations, which they had very real ones, and using less memory specifically, that's very interesting. Yeah, there are innovations there for certain, but it's one large number in a path of incredible cost declines. So if you look on the other side of the ledger, what's happened post DeepSeek? Well, President Xi of China invited every single major Chinese company to do a big photo op, which matters in China. He invited Jack Ma, who we thought had been put out to pasture, making a very public display. They gave 137 billion in AI funding because the founder of DeepSeek himself said the number one thing is we need more big iron if we want to compete with the West. And now all of these companies we are saying they are doing historic orders of NVIDIA's export compliant GPUs. So we are seeing historic numbers of orders for GPU demand. We have also since then seen France announce $100 billion in AI funding. South Korea announced its own national initiative. And just breaking over the wires is that Facebook is now eyeing a $200 billion development. Who knows how speculative that is. So, you look at the scorecard and it's very interesting. And then you look at Microsoft. So let's break down that story a little bit. So Microsoft had a partnership with OpenAI. Well, what they were supplying for a lot of OpenAI, there's training for AI, which is actually training your models. And then there's actually running models. Microsoft would love to be in the business of just running the models. That's a pretty attractive ROI business. But if you want the relationship in the business from OpenAI, they're pushing you past your comfort zone in training. So what happened is there's a pretty public breakup on this front where OpenAI said, no, we're gonna go with Project Stargate, which had a $500 billion number, mostly PR, but $500 billion. And they're now working with funding from SoftBank and partnerships from Oracle is going to do a lot of the data centers there. Point being, though, Microsoft, they just lost all this post-training. What they need to do is they need to rebalance their data center footprint. So they're trying to get out of training, which is huge, massive training data centers. You're talking like 60% of the expense on building out the power, building out the shells for the building. And they're trying to get into new leases that are mostly built around inferencing, where most of the expense is the actual compute itself. Compute, which is the thing that you're selling to customers. So I'm glad I can conclude my rant here. I feel so much better. But it's to say that we are in a era post, and we'll see with NVIDIA's earnings what more there is to come. The world may rise or fall off that. But we have almost universally some really incredible data points. And we just have a narrative forming, it seems almost from Twitter, of things that are very easily kind of knocked down. And that isn't to say that you're going to definitely make money on AI or some of these stocks weren't overheated. It's just of all the reasons for these stocks to decline, they're both very flimsy reasons that are almost, like I said, just poor narratives that have successfully been spun up in the media.
Yeah. Well, gee, you mean the media doesn't always tell us? That's a whole other rabbit hole we could go down. No, I want to go back to something you were talking about earlier, because it's not something I'm as familiar with.
Sure.
I'm limited to your on ice conversation, a little bit that I've read from Ben Thompson, and that's about the extent of my knowledge. So it's very surface level at best. Reasoning. I'm not familiar with that and maybe what's going on with that. So maybe you could talk a little bit about that.
Yeah, we're about to get weird.
Okay. Are we talking like, the Terminator weird kind of thing?
Potentially. So we'll get to an end point here. We were chatting a little bit before the beginning. Part of my fascination with artificial intelligence, I've been involved with it. I've been following it for 15 plus years, but I'm also a business owner. There's a great Buffett quote that I'm a better investor because I'm a businessman, a better businessman because I'm an investor. So I use a lot of stuff that I'm seeing from kind of owning my own businesses. And in 2023, post Chat GPT, you knew it was big, but what essentially did was it took the cost of a written word done at human level from about 10 cents down to effectively free. So you essentially had this incredible unlock that's had massive impacts. I think hundreds of thousands of freelancers have lost their jobs, not just from companies using AI, but also companies like Google not knowing how to handle this and kind of adjusting algorithms to get in front. It's been a very messy time. So what happened is in September, OpenAI, who's normally at the leadership of all these AI companies, now it's becoming a little more of a back and forth battle, but they released a reasoning model named O1. I believe it was in September. They didn't actually release the full thing. It was a preview in September until December, but it was really impressive and it was making some strides. And then on December 20th, they released a preview of their next model, O3. It's astounding. It immediately there's code competitions, immediately took this model up to top 50 in the world. The hardest math problems in the world, previously AI models were able to solve 2 of them. They're able to solve 25%. So, when we talk about getting weird, we are now at a phase where if we see a year of progress from these reasoning models, they're going to be better than humans at something like coding. Almost every human on earth, if not every human. And here's what's really weird. We might not actually be able to even make benchmarks for them. We might be beyond our ability to create math problems that don't stump them. So how reasoning works, just for a little tangent here, is essentially it uses something called a chain of thought. And this is, what you've probably seen people looking at DeepSeek. You can actually see how the model thinks. It's thinking through a problem, and it gets reinforcement learning whether or not its answer was correct. And if so, there's then reinforcement learning to generate kind of the next prompt in the thought process. So what's really interesting about this is the longer these reasoning models think, the better results you get, which is another one of these scaling laws. The other side of it too is as they're thinking, that creates training data. Earlier, we were talking about, okay, we're out of training data. So how do we solve that? Well, these reasoning models are solving it because they're actually creating the training data that goes in to feed the next model from it. So yeah, well, and here's where we're going to get to, the question right now. We've talked about training under what you call pre-training, kind of this old scaling paradigm, going to billions of dollars. Right now, we're still at the tens of millions in reasoning. So that's about to hit a huge scale, and we're going to see how high it goes. Now, some questions is, this is very good at areas that are objective, like mathematics or coding, because you can do this chain of thought. Is reasoning going to create the benefits in some areas that aren't as objective? When could something like reasoning start doing something like novel research, where it's actually able to make some breakthroughs itself? And here's the really trippy one. At what point does reasoning get to a point that it's self-scaling? So you've got the training data from the reasoning models, which feeds into the next. The AI is self-improving on R&D, and reasoning is simply a continual iteration. So I know it's an investing podcast, but this is when you're wondering why people are so excited, and you're seeing these announcements of something like, why is a company like Meta considering 200 billion, or why are these numbers? I think we are still really on the frontier of this next breakthrough, and everyone's trying to get a hold of the levels of progress that we're able to see in coming years.
Mhm. Yeah. So maybe we could segue to the whole investing thing. So
Sure.
you mentioned NVIDIA, of course, and
Mhm.
we've talked a little bit about Microsoft and touched on Google. Like if you're looking at the whole AI space, is it focusing on the leaders? Is it focusing on the people that are going to be benefiting from it? Or can you look in the air quote picks and shovels, part of it? If you think about it, like how do you think about it, and how would you not recommend, but maybe
Sure.
suggest people look in places to take advantage of this?
Yeah, and or the AI investor podcast I do, I partially did a $500,000 portfolio. I was going to
Mhm.
be investing my own money, so I was like, this will be fun. I'll just put it out. It means I've got crazy people yelling at me when the market drops 5%, but it also allows me to show my thought process. So I've kind of followed each of these areas, and generally, I've thought initially the waves that you're going to see of this trend is initially you're going to see the companies that are the closest to compute itself. They're going to see the gains, which specifically was NVIDIA. You had AMD, which hasn't benefited as much. You also have other companies doing custom processors like Broadcom and Marvell, because that's a natural first step. The second step that you see is you basically need to build out an entirely new form of data center to accommodate these massive clusters of GPUs working together. So you've got some people have been buying the power companies themselves. Some people are buying power supplies and other functions that used to not be very interesting in data centers. And then you've got a lot of the networking plays and areas like that. For me, it's deeply fascinating because every iteration of the market's so interesting. Post the iPhone, I spent so much time doing research and articles for fool.com and other areas on how to play the smartphone supply chain. And, you had areas like, RF, because of the growth of 3G and 4G. And, it's funny, the biggest RF company, someone like Avago today, is Broadcom. So
Right.
they followed a path from like 10 billion to a trillion. That's a generational story not many people talk about. But regardless, you have areas like optics that all of a sudden within a decade, is this going to be an area just by being a relative top dog in this space? Are you going to see your addressable market increase so much? You've got companies that, if you go back and you look at their stock chart, you see this giant crest in 2000 and then a long time at effectively zero and now rising up. A Sienna would be a great example of that.
Mhm.
And all of a sudden they're involved in the interconnects that are used between these large data centers doing training runs. That's deeply fascinating. So you have a whole looking through a supply chain there. And then you have a next step that you're going to see a lot of software companies. And there's been a lot of talk that this year there's going to be, the buzzword is going to be agents, which is AI that can effectively act autonomously. And, that you're looking at the leaders in that space. Everyone's seen Palantir. That was a company that we had done some reports at the beginning of last year. I didn't add it to the portfolio because by that time I was trading at 60 times sales, and it was just a little too rich. But you see the hunger for people looking for ideas in that space, and we're at the very formative stages. And then behind all this, there is the idea that the great debate right now is whether the end state of AI is whether it's going to materially increase productivity and GDP. And if it does that, it's going to reach a lot of beneficiaries. David Gardner, who, I mentioned from the Motley Fool, he had a phrase that from the internet, everyone became an internet company because you had websites, you rebuilt your entire supply chain, you built your tech infrastructure. And the belief is that every company will be an AI company. And the question is how fast we'll get there. So, if we arrive at a place, the true test of AI is it going to be a material bump to world GDP, and how quickly do we get there? And if it does that, it's going to start affecting a lot of even cigar butt companies. You could take it that far. And another area I would say, even if you own an S&P 500 index, you're probably far more invested in AI than you believe, because the weighting on that so heavy to all these major technology companies that at a minimum, you own hyperscalers like Microsoft and Amazon and Google, and that is rapidly the majority of the valuation for each of these companies. So it's really exciting, I think, partially because if I were, doing a man on the street thing for Jimmy Fallon and saying, hey, give me an AI company, everyone would just say NVIDIA, right?
Right.
And
yeah.
a lot of people say, I don't know how to invest in this beyond NVIDIA, but there's beginning to be an incredibly complex web of investing ideas across the space.
Mm-hmm. Yeah, for sure.
My life's passion is to turn over as many rocks as I can to find the gold that's hidden underneath. To see a sample of a stock where I did just that, go to stockwriteup.com.
I was talking to somebody the other day, and it dawned on me that a company like Intuit and Adobe could be associated with AI because they're using those as an integral part of what they sell.
Mm-hmm. Well, and there's a question, I don't have a great answer to this, but is this the birth of the biggest opportunity Adobe's ever seen, or does this kill Adobe? When I was listening to a podcast recently, and they said, "What's your number one prediction for 2025?" All of the people said on the podcast, "Well, I believe AI effectively kills enterprise software," but you have a very strong argument that it's also going to strengthen a lot of these companies to levels never before seen. So, Adobe's a fascinating company to watch because a lot of the generative creations in media, they're at the forefront of this. So if you're watching them, it's going to give you a preview of what flows through to everything else.
Right. Yeah, exactly. And I mean, companies like Salesforce, with their culture of embracing technology and being innovative, you could easily see them adopting all of this and it being very much a part of what they do.
Well, and Salesforce is a model that's interesting to watch in a couple ways. Number one, Benioff, he knows how to get the forefront of, he knows how to get the buzz for every trend.
Yes,
so their latest earnings call was all about agents. But the second thing, they've announced that they're hiring no software developers this year. As a little tangent, I had mentioned how AI, one of the first things I noticed was the impacts it was having to our business. It's going to be deeply fascinating because when anyone was losing their jobs in the past 10 years, the first thing a lot of people said to them was learn to code. And what's the first industry that's going to understand how the massive productivity gains from some of this AI software, and also where reasoning is on an S curve? Well, that's coding, that's software development. So you're seeing something really powerful happen. We had one of our employees who doesn't have a software development job, and he's been working in Windsurf, which is, Cursor and Windsurf are two programs a lot of people are using as coding assistants. And he went and he built out some tech work that we probably would have gone on Upwork and paid 50 to 100K to, and he has no formalized background. It's our developers themselves. We had just done a big company meeting and they have fully embraced. They're project managers now. One of them just said, I just spend all my day clicking yes, no, and trying to do new prompts. He calls it vibe coding. If you go on Twitter, you'll see a lot of vibe coding. So it is just, it's going to be really fascinating in that the one market that was growing is going to be the first to embrace AI, and how that develops in areas like jobs and productivity is going to be a preview for kind of the economy as a whole.
Right. Yeah. Has there been an ETF created around the whole AI thing yet?
Oh, yeah. Is there money to be made? Yeah.
Yeah, of course. That's probably a dumb question.
No.
I'd like to retract that, please.
Strike it from the record. No, there are a lot of ETFs. One thing I would say in one of my podcasts I went through, because someone had asked for a best ETF. So I picked them out, and what's inside these ETFs, it always matters to look at an ETF, what the allocations are. But some of them very not aligned to kind of the growth drivers in AI itself. So what you can put in an ETF, one of them, their second largest holding was Bank of America.
Excuse me? Bank of America?
Bank of America.
Check, please.
Where compliance is years away from allowing in most areas. Right. But their reasoning for that was you have to create a marketing pitch to regulate products. And theirs was, we are looking for patent counts to find the companies that are the most innovative with AI. Somehow that arrived at Bank of America.
Okay. Check, please. Okay. All right. So I guess if you had to give me your crystal ball prediction of what you think is going to happen in the next few years, your feet will not be held to the fire on this. So this is purely speculative on your part if you want. And I guess I'd be curious to hear what you think.
I am an AI bull. I would say the time you always want to, especially if you're more of a trend investor, is you need to have some vision of the future and going through different cycles and being able to recognize what you're seeing. I'm fully aware of why anyone would be looking at AI today and say this cannot last. And around mid last year, I was starting to wonder if my priors were wrong, especially because, again, the scaling laws in this pre-training world seem to be breaking down. Reasoning, it's very telling to me how many people use a product like Deep Research that at this moment is the worst it will ever be. And it's still in a very Gen 1 and say, wow, okay, I just suddenly had my iPhone moment. So I think we are in a very steep part of the growth curve around reasoning. And I think that's going to lead to a couple years that are going to take this from the periphery of most people's lives to something that is very front and center and is going to be powerful and genuinely have enough intelligence that if you are not able to make this a centerpiece of any kind of white collar work, you're going to be risking getting left behind. So I do believe that AI is going to start materializing in some higher productivity stats, some higher growth rates. You know, you look at the internet itself, a big reason people go, how did I ever get to Coke train for 64? How did people ever buy into this? And it's like, once the internet just started, we actually had some of the highest productivity stats ever seen. What happened was it was able to sustain itself, and many of those stats went back. People said, we're not living in this new paradigm. Coke went back to trading for 20 times earnings. So I fully recognize that there needs to be ROI from these data center companies beyond just selling to the model companies. This needs to be embraced by software. But I also believe that this is the real deal. So that is my crystal ball. I believe the inning is likely earlier than most people believe is. Now, that being said, I do think you'd be crazy if you didn't think that there's going to be some severe adjustments. And if you were to look, I went on my rant earlier about people reacting to DeepSeek. And right now, the market, you know, in the long term, results are going to flow to returns. In the near term, it's largely narrative and multiple contraction.
Right.
The narrative, people want to get out of this. People will want any excuse to get out. So I think if you are looking and you're saying, I would like to look for some more investments in this space, look at how you're feeling, looking how your emotions are, watching kind of the drops right now. You can go to some more stable areas. Like you said, you could go to companies that will be able to use this to their benefit. I mean, eBay is a company that I've seen a lot of people citing as a benefactor. They're at a 52-week high right now. You can also take a step down to just allocations to hyperscalers. That's going to be a 3-horse race for, I believe, a long time. Amazon, Microsoft, I mean, they are incredible businesses, Google as well. Or you can approach this from ways that you want to take less risk. If you want to take on more risk, you're going to be looking for the picks and shovels. You're going to be making some bets on optics. You're going to be making some bets. One company I think is really fascinating right now is a company like GitLab, because they're going to have a coding assistant in their Duo product. And I think that's going to create a lot of near-term momentum if this takeoff in reasoning is as steep as I think. So, you know, but at the end of the day, if you wanted a bear case to counter me, because I think we always need to be aware of where we could be wrong. Tyler Cowen, on his excellent blog, he recently did a full, I think it was 10-part breakdown of why he believes that AI will only lead to 0.5% GDP growth. And if that's correct, well, The economy right now is worth about 100 trillion. We have, just from the hyperscalers alone, 300 plus billion in AI spending this year. That is 0.3% of global GDP. If that is only producing a maximum of 0.5, we are going to reach over capacity pretty quickly. So
Right.
I think that's the bear case. So we will see. But if you're listening to this and you're wondering, am I going crazy when these companies are announcing 200 billion, 500 billion? Well, hopefully this at least elucidates the logic. May be wrong in the future, but what it is at this current time. Because again, living through the dot-com bubble, things that look crazy right now, there was a rationale for it, whether or not it came true or not. And we do have some strong rationale today for why these companies are making the moves they're making.
Yeah, for sure. The history has shown us that there can be a lot of irrational exuberance in the markets, but it doesn't mean that directionally it doesn't end up correct.
Yes, I think there's going to be, even if this does continue straight up into the right over a decade, which I believe it will directly be that way, I have no illusions that there are not going to be some peaks and valleys, of which a little mini valley right now. We'll see if it turns into a bigger valley.
Right. Yeah. Well, that's part of the game of investing, right?
Yep,
for sure. All right. So I guess the last question I have for you is, like, how, for you, what are your use cases of AI in your own life? Do you use it on a regular basis, or is it more a work only, and then when I go home?
No, it's a great question. I love to end with that, because that's where, again, even if you're not investing in AI, for the majority of jobs, if you're not thinking about how you can begin incorporating this into your workflow, it's going to be increasingly more and more difficult. So right now, OpenAI is moving their deep research tool down to their $20 level. Eventually, they're going to make it a free level. I think deep research is a fantastic area, especially if you're doing thoughts on areas for you, starting to build out some, if you're looking at different industries or comparisons, starting to integrate that into some kind of workflow is fantastic. I would love to be a little bit more hobbyist into some of the areas like coding, to see if a bozo like me could actually, start scaling up. I haven't gone to that level, but I even, when I'm in putting my kids to bed, will frequently use AI to come up with some stories, or them to ask me facts, or areas like that. And where we've put in the workflow of our business, we start now with every single problem that we're approaching. We start with, how could we build an automation through AI? If we've got a financial website, which we do with 24/7 Wall Street, if we're thinking about how we want to have better alerts, tying in some of our own data to where we want writers being able to have better coverage. The first place isn't that we're going to have someone build a spreadsheet and manually monitor that. It's going to be, how do we automate this in a better way? So my mind, in terms of projects for work, now always begin with AI. And as I noted, whatever you're using today should be the worst all of these products ever are. So whenever you're using something, think about that for a moment, because especially if we're at this new scaling law, long reasoning, and we're just at the beginning of it, if this is the worst it's going to be, where it could be in a few years, it's going to be really interesting. And also, we didn't even talk about some of the areas to watch for. Just watching for robotics the next few years. Is this going to see a takeoff like self-driving cars seemingly seen? Healthcare, there's been some areas like protein folding that are kind of crazy to watch. Are we going to start seeing some takeoff? So watch these broader spaces as well. And every time this impacts a broader space, gives you new opportunities to consider how to invest in it. If robotics takes off, a lot of the semiconductor companies that haven't taken part in this so far, maybe they get a new inflection point. So even if you've missed NVIDIA, there's always new facets of this trend that are endlessly kind of taking off and completely fascinating.
Yeah, well said. All right. So this was a fun conversation, and I learned a lot, and I know our listeners did too. So where could people go to find more about you and what you're doing, with your podcast, and also 24/7 Wall Street?
Yeah, Dave, number one, I love being on. If you want to hold my feet to the fire in a year or two, You could just go back and play clips and say, you were wrong.
Hey, Eric, remember what you said? Yeah.
So we'll see. No, so like I said, I've got my AI investor podcast. We break down bi-weekly. Sometimes we'll do weekly, depending on news flow. Events in the space. I really wanted to do this because I do, if we're living through something as powerful as the internet that people said, am I ever going to have this again in my life? I thought it'd be really cool to have kind of a time flow of the ups and downs and how an event like this worked. I invest my own money publicly. I'm not trying to sell a service. I was going to be buying these stocks anyway. So I thought it'd be fun to do. I just do a $500,000 portfolio where it's only focused on AI. It's not meant to be your entire portfolio. I buy a lot of other things, but it's top AI ideas. And then we have 24/7 Wall Street. If you're looking for new financial resources, we are working to continually upgrade that with real human thoughts, in the sense that we'll have things like, if NVIDIA is reporting earnings, if you come to 24/7 Wall Street, you're going to be able to see a live blog there with my analysis of the events. That's kind of where I would send people, but I really enjoyed having the time to talk with you about AI as well.
Yeah, it was a lot of fun. I really appreciate it. It's something that I find interesting and kind of fascinating, and I love to learn new things. I'm curious like a cat. And so anything I can ever learn about something I don't know about is always like, so. So thank you very much for joining us today. And with that, we'll go ahead and sign us off and go out there and invest with a margin of safety, emphasis on the safety. Have a great week, and we'll talk to you all next week.